Hello and welcome to the weekly market metrics. We are in week 41 of the year, which means we have just about 11 weeks left in 2025. And that means if you had planned for 6-pack abs, by now you should have at least hit 5-packs. Just saying. Anyways, moving to more mundane stuff like the market metrics this week, I must say what a lovely week this was. The markets closed significantly higher from last Friday's close. The positive sentiment was fueled by news of a ceasefire between Israel and Hamas, and of course, the festive cheer around Diwali added to the optimism. US markets too have shown resilience so far, helping sustain an upbeat tone across global markets. All in all, the positive momentum from last week has clearly carried forward. Let's start with our favorite Nifty 50. On the weekly charts, we are still trading within a broad range of 24,350 to 25,650, a range we've been stuck in for nearly 15 weeks now. I really don't know when we are going to come out of it, but 15 weeks is quite a stretch by any measure. Talking about the positive momentum this week, Nifty moved up 391 points or about 1.57% from last Friday's close, marking 2 consecutive green weeks and signaling a sustained momentum from last week's rally. Overall, Nifty is just about 4% away from its all-time high at 26,277. I have a feeling that we should make a new all-time high sometime this month at least. Fingers crossed. Looking at the daily charts of Nifty, it has nicely crossed last week's resistance zone of 25,000 to 25,100. Monday and Thursday were solid with gains of 0.74% and 0.54%, while Friday added another 0.41% or about 104 points. Tuesday and Wednesday were relatively muted, showing some selling pressure around the 25,200 zone. But Friday's strong close about 25,200 I think confirms that it's the buyers who are still in control. The next immediate resistance for Nifty lies at around 25,400 to 25,450, while 25,200 now turns into the near-term support. Last week's low near 25,000 should also hold well, not just technically but psychologically too. It's a big round number thing. Moving to the hourly time frame, the index held comfortably above the 50 EMA throughout the week, showing strong underlying momentum. Yes, there was a brief pullback on Wednesday when prices fell from around 25,200 to 25,000, but the dip was quickly bought into over the next 2 sessions, confirming a strong uptrend. Overall, the chart continues to show a clean and well-defined uptrend with higher highs and higher lows clearly in place. Talking about the intraday versus overnight moves in Nifty this week, most of the action clearly came during market hours in the intraday sessions, while the overnight moves remain largely muted. It's the other way around on the yearly time frame. Nifty remains up 7.59% on overnight moves cumulatively, and the intraday performance has just turned positive thanks to this week's positive intraday moves. Moving to Bank Nifty, on the weekly time frame, the index is up 1.84% or about 1,020 points, closing well above the key resistance of 56,200, which now turns into a support. The next major hurdle is the all-time high of 59,629. While Nifty still sits around 4% below its all-time high, Bank Nifty is just 1.8% away. The question is, will we see a new all-time high in the coming week in Bank Nifty? Well, since we are just about 1.8% away, the bull in me is certainly positive about it. Looking at Bank Nifty on a daily time frame, it is trending comfortably above its previous resistance of 55,800, which we had discussed last week. It will now start acting as a strong support zone. Bank Nifty had a strong week with 4 green sessions and only Wednesday closing in red, highlighting the underlying bullish momentum throughout the week. The next resistance lies between 57,350 and 57,600, very close to the all-time high level of 57,629. Looking at the hourly chart, Bank Nifty also shows a pattern similar to Nifty, staying consistently above the 50 EMA throughout the week, reflecting a steady and well-supported uptrend. Talking about Nifty Midcap Select, it's also looking strong on the weekly time frame. It's up 356 points or 2.78% this week, marking 2 straight green weeks. The index is showing solid momentum, holding above a strong support near 12,450. As long as it stays above that level, the bullish trend looks set to continue. On the daily time frame, Nifty Midcap Select is showing a strong trend recovery. After forming a solid base around the 12,500 levels, the index has moved up nicely over the past 2 weeks and is now approaching a key resistance near 13,250, which is also a recent swing high. As long as it holds about 12,800 breakout zone, the structure remains positive with higher highs and higher lows clearly visible. A breakout about 13,260 will change the game and it will open path towards a new all-time high, which is around 3% away. Talking about support, we have one at 12,800 followed by another one at 12,500. Overall, the momentum remains bullish for mid-cap select as well. Moving to SENSEX on a weekly time frame, the index ended the week up about 1294 points or 1.59%, showing solid strength. Sensex is also signaling bullish momentum like other indexes. Talking about key support zones, we have one around 80,150, 79,800, that zone, while resistance is seen around 83,100 levels. A breakout about that could open doors for a new high in the coming weeks. On a daily time frame, Sensex ended the week on a strong note, closing 4 out of 5 daily sessions in green. Monday led with a solid 0.72% gain, followed by Thursday, which was up 0.49%, and Friday was up 0.40%, reinforcing the ongoing short-term uptrend. Psychologically speaking, the index has reclaimed the 82,000 mark, which now acts as an immediate support. On the upside, as I had shared earlier, there is a resistance around 83,100. Again, I'm hoping a breakout above 83,100 should lead to a new all-time high. Looking at the ROC table on a YTD basis, all major indices are now in green. Until last week, the mid-cap index was still in negative territory, but it has since turned positive. BANKNIFTY continues to lead with an impressive 11.3% YTD gains, followed by NIFTY 50 up 6.94%, and the mid-cap Nifty remains a laggard with a modest 1.88% rise so far this year. Talking about the directional bias, all major indices Nifty 50, Bank Nifty, Midcap Select, Sensex are trading above the 21-day and 50-day EMAs, indicating strong momentum. Both short-term and medium-term biases remain positive, reflecting a broad bullish market. It is one of those all engines blazing sort of week. Talking about sectors that are powering this uptrend, this week's top sectoral performers saw 4 new entrants. Nifty IT, which is perhaps on the back of all the good news from IT incumbents such as TCS. Then we have realty services and pharma taking the lead. Nifty Bank continues its momentum from the previous week. Talking about range, expiries and wicks for the option traders, this week the range data shows that volatility remained moderate across major indices, with most trading near their 10-week average ranges. Nifty 50 saw a weekly range of 449 points, while Sensex moved 1498 points, both pretty much inconsistent with the recent averages. The 5-day average continues to remain below the 10-day average range for all 4 major indices, indicating mildly subdued intraday volatility. During the week, Nifty expiry on Tuesday witnessed a 145-point range with an M-shaped kind of a move, while Sensex expiry on Thursday had a 580-point range forming a W pattern. Both expiries were extremely tough for short vol traders, as sharp intraday swings and low option premiums left little room for profit. In short, it was a tough week for option sellers despite the seemingly contained ranges. Talking about India VIX, it stayed nearly unchanged this week, hovering around 10 levels, possibly the lowest in many years. Such prolonged low-vol environment often reflects complacency in the market, with traders underpricing the risk. While timing a reversal is tricky, history suggests that periods of extremely low VIX are often followed by mean reversion, meaning volatility could spike ahead if any catalyst, global or domestic, gets triggered. But as I said earlier, we really cannot time it, and VIX can continue to be low for many weeks. Good time for trend followers perhaps. Let's look at the commodities this week. It's often said that gold moves in the opposite direction of the market, but this week that logic didn't hold. Gold in USD terms surged past the $4,000 mark this week, while silver climbed above $50, breaking its previous all-time high from August 2011. In India, gold rose 2.86% this week while silver gained 2.33%, extending their strong momentum. Those of you who follow silver ETFs, you would have seen that the silver ETFs are currently trading at unusually high premiums. So if you're planning to invest, make sure to check the INAV and the LTP to understand the premium before buying. Talking about natural gas, it fell sharply, losing over 5% this week, while crude oil slipped 0.62%, extending its downtrend. In short, we've had 2 consecutive positive weeks, and with Diwali just round the corner, a festive mood is likely to set in, bringing renewed positivity and momentum to the markets. Moving to what we can expect in the coming week, there are no market holidays next week and no major scheduled economic events either, except for the Indian inflation rate announcements on Monday and Tuesday. On a lighter note, Maria Corina Machado, the Venezuelan opposition leader, took home the Nobel Peace Prize this year and not Donald Trump. So fingers crossed, and let's hope that he doesn't get upset and make some crazy announcements over the weekend and spooks the markets on Monday. Can never trust that man. Till then, trade safe and I'll see you next week. And yes, before I forget, thanks to all of you, the In the Money by Zerodha YouTube channel has now crossed 10,000 subscribers in such a short time. I'm really grateful for your incredible support. We've been receiving some amazing comments and feedback on our videos, and I deeply appreciate the time that you take to share your thoughts. Please do keep them coming. See you soon.